All right, welcome everybody. I hear we are the first session on the virtual webinar day of ICT4Ag. So welcome to the start of the day for many of you. For some of us, it's much later. But we're really happy to be here with you today, and we are looking forward to sharing a bit about some of the work that we and our partners have been doing with respect to advancing a more positively impactful and inclusive digital agriculture ecosystem in low and middle income countries across the globe. So we have a fantastic session lined up today, and we're lucky to have an incredible set of panelists who are contributing to this ecosystem all over the world. But first, I'm going to walk through, just so you get a shape of how the session's going to look. I'm going to walk through a bit about the state of the digital agriculture sector report that we at Beanstalk authored last year, and a bit about the past, present, and future, as we see it, of digital agriculture ecosystems. You're going to hear from my colleague, Katarina, about how in the months since we've been investing in translating this research into action. And we'll wrap with a panel from my esteemed colleagues and partners, Caroline Gomans, Director of IDH Intelligence, Albert Bogard, Head of Smallholder Solutions at Rabo Partnerships, and Mendra Matur, Venture Partner at Barat Capital and a Senior Advisor at Beanstalk AgTech. But I'd like to share first about a bit about our organization and our partner at IDH who have contributed to this effort. So I should introduce myself. My name is Justin Ahmed. I'm a director at Beanstalk AgTech based in Melbourne, and we are an innovation advisory and venture building firm who are committed to unleashing the potential for agriculture to be the leading force for good across the Indo-Pacific and across the globe. We focus on helping to build, deploy, and scale technologies so that can be more effectively utilized by those who are most in need of using it and are best equipped to generate positive impact from that, and that's farmers and their value chain partners. We work with innovators, agribusinesses, investors, governments, and development agencies to advance the state of agricultural technology. And today we are here in partnership with IDH, a social enterprise that it co-convenes, co-creates, and co-finances inclusive and sustainable solutions to enable people in business, investment, and government to create value for people and the planet. So just a bit of backdrop about the context and where a lot of this work has been based. Across the course of 2023, as many of you would have been aware, or I'm sure involved, Beanstalk was enlisted through a $75 million buy-in program called the Digital Frontiers, which is managed by USAID in partnership with the Bill and Melinda Gates Foundation, UK's FCDO, and managed by DAI, to publish the State of the Digital Agriculture Sector Report. This was a first of its kind global benchmark of the state and penetration of digital agriculture across low and middle income countries in 4 different regions. We looked at South Asia, Southeast Asia, Sub-Saharan Africa, Latin America, and the Caribbean. Our focus was, we spoke to over 250 people from 60 different countries, surveyed hundreds more, and tried to piece together both a quantitative and qualitative future outlook for the digital agriculture sector. Our focus was really on laying out not just a rosy picture for the sector, but trying to paint a path of what alternative futures for the sector could look like, and how we could move beyond inertia and market forces to build a more inclusive and impactful digital agriculture space. You can follow the QR code that's on the screen now if you want to learn more and download the report if you haven't already. Slide. I'm just going to share a few of the insights I think are particularly relevant, the headline insights from our report, before we dig more deeply into the work that's been done since. But I think the story of digital agriculture over the last 10 years is particularly relevant. In the past decade, the supply side of the global digital agriculture sector has exploded in quite a significant way, though it's been decelerating in some ways since 2018 with respect to the launch of new solutions. We identified in our report nearly 1,400 digital agriculture solutions that are active across low and middle income countries from a base of less than 200 in 2012. A lot of this growth has been driven segmented across regions, almost half of those solutions coming from sub-Saharan Africa today. And the demand side of the equation has been just as explosive in some ways. We estimated a total of about 50 million users of digital agriculture in low and middle income countries, which means an active adoption rate of about 10% of smallholders and agri-SMEs today. A large part of that comes from South Asia, which accounts for more than half of those estimated users. And while this is, I think, a really positive story around the digital agriculture tools, adoption is only one side of the equation, and you can see there's clearly a lot of headroom and growth and opportunity for digital agriculture tools to be built and harnessed in a meaningful way by stakeholders across the agriculture ecosystem. Slide. As I mentioned, our focus was not just to provide a set of statistics around what the state of the sector looks like today, but to lay out a path of alternative futures for the sector, which we called thriving and derailing scenarios. We recognize that regardless of some of the support and development initiatives that reach the sector today, there's a set of inertia and continuous development being unleashed, especially in the technological development of the sector as we see it today. But we tried to parse out what could be actually the different future if this sector is given the right kind of catalytic support, nurturing and guidance between a sector that is ultimately thriving in 10 years versus derailed, and called out the opportunity for digital agriculture to really drive economic growth in low and middle income countries. We aim to lay this out across not just economic outcomes, but social outcomes, environmental outcomes. And the opportunity at stake in this way is pretty significant. The difference in about $450 billion per annum in economic output, from a difference in about 22% of agri-SMEs and smallholders adoption, and the difference between 9% reduction in farm gate greenhouse gas emissions versus a potential 3% increase in farm gate emissions. So obviously the potential for digital agriculture, if properly stewarded and guidance, to contribute to economic, social, and environmental outcomes is quite significant. Hopefully that gives a bit of the backdrop for the criticality of this discussion today. I'm going to hand over here to my colleague, Katarina, who's going to talk a little bit about where we've gone since and how we are focused on translating some of the key recommendations and learnings from this report into meaningful actions to push forward the sector.
Thank you, Justin. So since we have published this report, IDH and Beanstalk have published to conduct a series of workshops that aim to identify few tangible initiatives that can drive the digital agriculture sector forward and remove the bottlenecks that we see. So as Justin said, there is a huge potential for digital agriculture to unlock almost $500 million of value per annum for the global south. And our report provided more than 100 stakeholder-specific recommendations in order how we can orient the ecosystem towards the thriving outcome and not the derailing one. So in order to bring some of this research to reality and come up with a few ideas of actionable concepts that can help us advance these recommendations in practice, IDH and Beanstalk partnered to conduct a series of 5 closed-door industry expert workshops that you can see here on the slide. The workshop focused on advancing data sharing for digital agriculture in Eastern Africa, about empowering producers through farmer-centric data governance in Brazil. We have done a workshop on bridging the funding gaps for digital ag via a new innovative finance model in West and Central Africa. The workshop in South Asia focused on closing the knowledge gap on the digital agriculture impact. And lastly, the workshop for Southeast Asia was oriented towards scaling solutions that are facing smallholder farmers towards inclusive last mile delivery services. After having a series of stakeholder consultations and workshops, we have developed a series of actionable, backable concepts that can help accelerate the development of digital ag ecosystem. And today we will be sharing 5 of those key concepts here with you. Okay, so the 5 following concepts resulted from our workshops discussions as some of the actions that can solve these challenges within the digital ag sector. And we will be going into each of them in detail today and talking about what's the actual problem each of these concepts is solving. But here are all 5 of them on one slide. So the first concept that we have is focusing on data sharing. And it suggests to assess and pilot new data sharing models to improve returns to data collection and establish a shared data platform. The second concept is addressing some of the funding gaps, and it suggests to establish an AgTech investor syndicate or a co-investment platform that should improve investment flow for especially early stage digital AgTech ecosystems. Talking about blended finance and challenges that blended finance models also face, concept number 3 proposes to structure a fund of funds model that will direct capital into underserved market niches and support local fund managers in the global south. Another action in the blended finance space is to potentially tailor the existing finance models that will allow us to unlock funding for those corners of digital ag that are now underserved by finance providers. And last but not least, concept number 5 aims to improve impact measurement in the sector by providing incentives and advancing the business case for impact measurement in private sector. So now let's look into the actual challenges that we saw behind each of these concepts and talk about these 5 in detail. So the first topic, as you saw, is data and specifically data sharing. And obviously, as the name of digital agriculture suggests, data is a cornerstone of innovation in the sector. But we saw a lot of challenges associated with data and data sharing. Things like data ownership, its integrity, security, accessibility, and comprehensibility, all those still hamper the growth and potential that digital agriculture can create for low and middle income countries. And specifically during our research for the report and our workshops, the theme of lack of data sharing in the sector has been commonly repeated, as the same data points are being requested and collected again and again, increasing the costs of data collection and often creating fatigue among those who contribute this data. So the concept of DPI, or digital public infrastructure, is a set of digital capabilities which are usually open source and interoperable. This concept has emerged to address this challenge, and it consists of data standards, data management policy, and a digital technology platform that's connecting multiple data providers and data consumers. And this led us to our first concept. So the first concept as you already understood, looks at enhancing data flow across the sector and aims to create an ecosystem where data isn't just collected one time, but is actively shared and utilized by different stakeholders. So this concept involves building a shared data platform that will allow for this data flow and ensure that actually every participant will see real value in sharing their data. In this digital platform, data, once it's collected, it will be reused and repurposed, obviously with appropriate consent mechanisms. Clearly, the digital platform will need to have a clear use case for the data that's being shared, as well as a business model that will help to sustain the platform. But after we have aligned on these, the platform can be piloted in target geography, and hopefully it can be scaled to other use cases, locations, and value chains. So by implementing this initiative, we can first streamline the data collection process. We can decrease the costs that are associated with data collection processing. We can also minimize the imposition on farmers and other data contributors that keep sharing the same data with different stakeholders. And overall, this approach will help to increase trust and transparency in the sector. So this was our first concept. And the next three concepts will focus on funding and investment for digital agriculture. So talking about funding and investment, and you can see some of the statistics on the screen, but generally not only the current capital market conditions are challenging for the innovators to raise funds, but we have also observed a few clear long-term gaps in the availability of different types of funding across geographies and use cases. So in terms of these gaps, what we saw, first of all, there is a very large regional concentration in terms of investments. They tend to focus on a few countries, as well as they're often limited to just a handful of use cases that are well known to the investors. Besides those, a few crucial areas of financial support are commonly missing in low and middle income countries. Things like working capital, short-term debt are usually very hard to secure for innovators. And also there is so-called missing middle of the investments between small-scale grants from donors and your seed Series A stage investments for startups. So we have a few concepts that actually aim to address the gaps that we saw. So concept number 2, it's aiming to establish a syndicate or a co-investment platform, specifically for early stage ventures and active investors to pool resources and jointly invest into startups. This syndicate or co-investment platform, first of all, it can create synergies among a very diverse group of investors, and it will establish a structure where they can connect, collaborate, share their insights, bring together different financial instruments and risk appetites. Besides that, the platform will lower the costs of due diligence for the investors, as those costs will be shared among participating in a deal funders. And also it will address potential investors' lack of expertise and knowledge in agriculture and ag tech that commonly deters them from actually investing in this sector. So by establishing this syndicate, we can share the knowledge across the ecosystem and also help catalyze investment for early stage ventures. One specific model that has proved itself in addressing some of the funding gaps in emerging markets is blended finance, which combines private capital with development funding. And it is actively used, and it has already mobilized $42 billion for the ag sector to date. But blended finance faces challenges as well. For example, one thing we observed is when blended finance instruments are implemented, they usually tend to focus on very large scale investments in a select group of countries, because blended finance large funds are costly to run. The transaction costs are very significant. So smaller SMEs, early stage startups in nascent ecosystems that are not that well developed are usually overlooked by these mechanisms, even though they are in a desperate need of this catalytic funding. So the next concept is actually designed to address this challenge. So this concept is about a fund of funds model, where the main fund invests not directly into SMEs on the ground, but into local funds in the global south, and those in turn invest into local startups on the ground. The idea here is that many local fund managers in developing countries, they lack the required track record and network to access the international funding. But the way that they're set up is usually with lower cost structures. They can provide deep local insights and market knowledge, and they can also offer strong links for local investor participation. So the fund of funds structure makes it still financially viable for a blended finance provider because ticket sizes will remain large, but at the same time, it will build the capacity of local fund managers who will receive technical assistance under such model. So it will catalyze local investment ecosystems and will support early stage startups with the capital they need. Another finance concept is focusing on unlocking blended funding for AgTech verticals that are now underserved. So as we already spoke to it, funding tends to concentrate in a few select areas. Investors tend to focus on the business models and verticals that they know, like market linkages platforms that are easy to scale, or SaaS business models that they understand well from other tech industries. But within ag, other types of technologies are harder to scale. They require long investment timelines, often larger upfront investments, those like deep tech or anything with high capital expenditures. And those typically receive less attention. So this concept, it suggests to tailor existing blended finance models to address this problem. First of all, there is a need to understand what are those key funding gaps in digital ag in the global south, and we can do that by conducting mapping of supply and demand of capital out there. And based on this market intelligence, we can suggest and design a few blended finance mechanisms that are specifically tailored to be best fit to address these gaps that we will identify. So this will require some co-design process with potential capital providers before moving to implement these blended finance models in the market. But in this way, the blended finance mechanisms, they will be able to better support AgTechs and offer types of capital that are now often missing and overlooked by the funding streams. So the last challenge is about impact and impact measurement for digital ag. And even though the adoption of digital ag is growing, there is still a large gap in our understanding of its impact. So we all know that digital ag is often praised for its potential to create economic, social, and environmental benefits, and it does attract large amounts of funding based on these claims. But there are still lots of concerns about what is even considered impact, how is it measured. We still don't have common and standardized taxonomies and impact metrics. And still there is no clarity on who should measure this impact. Startups and innovators are often asked to report their impact to get funding, but impact measurement and data collection can be very expensive, time-consuming. It requires specific skill sets, knowledge, and resources both time and financial, that these early stage ventures commonly just don't have. So our last concept aims to close this impact knowledge gap and help steer the investments towards the areas that create meaningful social, environmental, and economic impact. So as we saw, there is a clear need to expand and refine the scope of impact measurement across the sector. So this concept, it proposes to improve the business case for impact measurement and incentivize the private sector to measure it. So this initiative will first conduct a stock take of what is happening with impact measurement in the sector, what types of data is collected, how is it shared, and most importantly, what are some of the incentives that make innovators collect this data and how it can be further incentivized. So after conducting this market intelligence, we will aim to establish a few pilots with a select group of innovators and provide them with technical assistance to help measure and communicate their impact. In this way, we can improve accuracy and standardization of impact measurement in digital ag, better align these impact measurement incentives with market forces, and overall increase data reliability and transparency about reporting the impact of digital ag. So these are the 5 concepts that we wanted to share with you. And with that, I'll pass it back to Justin to talk about where we go from here.
Thank you, Katarina. So yeah, from here, we have a bit of a call to action to everybody that is here and your network. We've been spending the last couple of months starting to socialize these concepts, to refine them, to identify more localized and relevant use cases and contexts in which these can be better deployed. And we are focused on the next 2 months and actually identifying the right implementing partners and potential catalytic funders, such as foundations, bi-multilateral organizations, DFIs, and others, to help us put some more shape behind these concepts and actually get them out into the ecosystem. So we have an invitation to please reach out to myself or to my colleague Caroline, we'll hear from shortly, to share more. But I think maybe best at this point would be to pivot to our panel. So those that have worked with us or helped us to workshop at this point and have played a pretty significant role in helping to both shape and reshape the initiatives as we see here. So I'm going to pass it around and give everybody the chance to actually introduce themselves. So maybe we can start with Caroline Gomez, the Director of IDH Intelligence. Caroline, would you mind giving a brief introduction to yourself and to IDH and your work at the Farm Fit Insights Hub?
Yeah, thanks, Justin, and also thanks, Katarina, for putting up this slide. So pleasure to be here. My name is Caroline Gommans. I'm the Director of IDH Intelligence. And IDH is an NGO that is driving sustainability from both an environmental as well as a social perspective across agricultural value chains. And we do this to create an impact at scale. And what we do see is that data and insights are actually key to create that impact at scale. And therefore also very happy to be here in this panel and share more about it. And also wanted to point to the Farm Fit Insights Hub, which you see on this slide, where you see a lot of where you can find a lot of data and insights on smallholder inclusive business models. So let me pause here. Thanks.
Thanks very much, Caroline, for your partnership on this effort. And of course, the Farm Fit Insights Hub relates so concretely to several of the concepts that we've been presenting here today. So I'm looking forward to diving deeper on that in the meantime. Albert, maybe I'll go next to Albert Bogard, who's the head of smallholder solutions at Rabobank. Albert, care to introduce yourself a little bit about yourself, about Rabobank, and your engagement in this effort so far?
Yeah, thank you, Justin. Can you hear me?
All good.
Am I loud and clear? Yeah. So my name is Albert Bogart. I work for Rabobank. We're a global food and agri bank, but actually we're founded by farmers 125 years ago. We're a cooperative bank as well. And we finance about 85% of all the farmers in the Netherlands and a lot of value chains internationally. So in addition to the many thousands of colleagues that we have working on that, we have about 150 colleagues working on smallholder solutions in emerging markets. And these range from carbon sequestration, like our Acorn initiative, where we sell carbon credits to companies like Microsoft. We have credit scoring capabilities, blended finance funds, also structuring capabilities. Also our foundation, which does a lot of piloting work, also with fintechs and agtechs. We did a lot of blended finance on that. And my role is basically to oversee these initiatives to make sure that products are aligned, but also capabilities are reused. And it's from that also specific role that I have a lot of interest in the work of Beanstalk and IDH and the sponsors. And many of them are our partners in projects and activities. And two initiatives are of particular interest. That's the data sharing piece and the data-driven impact measurement. So number 1 and 5. And that's not because the others are less important, but that's because we have done a little bit already on that part. And the additionality for us on the first and the second and the last one is biggest. So yeah, happy to tell you more about that later on.
Thanks so much, Albert. So glad that you can join, and looking forward to chatting a little bit about those specific initiatives and other partnerships you have in place today shortly. And lastly, I'd like to hand over to a colleague, Hemendra Mathur, venture partner at Bharat Innovation Fund, co-founder of ThinkAg, and a senior advisor at Beanstalk. Hemendra, care to introduce yourself?
Thanks, Justin. It's a privilege to be part of this panel. My name is Hemendra Mathur, and as Justin mentioned, I work as senior advisor with Beanstalk. My background is in early stage investing in multiple sectors, but most of my investments have been in the food and agriculture sector. I'm also an ex-Rabobanker. Worked with Rabobank for 4 years before getting into investing. Been investing into the sector for the last 15 odd years. I'm associated with this work for last sort of 15 odd months when we started to work on this report. And of course we have taken it forward with the partnership with IDH. I'm excited about all the concepts, but given my investment background, I'm particularly keen in building interventions for a syndicate of AgTech funds, as well as to channelize more capital into the sector through a fund-of-fund approach. So look forward to an interesting discussion. Thank you.
Thanks so much, Hemendra, for your partnership in pulling actually the study together, dating back quite a while. And giving us a lot of context, particularly around the investment and funding landscape and opportunities therein. So just to kick off our panel, I'm actually going to head back to Caroline. And Caroline, I'd love to just hear a little bit from your perspective, if you could share. Why did IDH want and seek to be involved in this effort? And what did you learn and take away from it?
Yeah, thanks, Justin. And yeah, for IDH, one important reason to collaborate is that as IDH, we have been working with quite a few companies on data and digital infrastructure. And whilst we have been able to achieve quite a bit of great impact in countries like India, Ghana, Kenya, we also realized that the impact is quite slow. It takes much longer than we had anticipated often. And we also see it that impact has been quite limited due to the fact that the ecosystem is really very challenging. We've seen a lot of replication of data collection. also seeing quite a lack of collaboration on alignment on how to collect data, what data to collect, leading to a lot of inefficiencies. And we are very keen to make sure that we increase that impact and focus on the things that we have seen working. And so what we have seen that is what is really important is collaboration across different stakeholders. And it's collaboration on a standard methodology. It's collaboration on some key indicators. It's also collaboration around certain ethics around sharing data back with farmers and companies where possible. And also really using the data and these data-driven insights to generate these more and these better investments that are also part of concept 2, 3, and 4. So for us, it resonates very strongly with what we have seen and what we consider to be necessary to reach that impact at scale. So more data, also analysis of those data to come to insights, disseminate those, and then feeding them back into investors to prove that small or inclusive business models can be commercially viable for both farmers as well as for the companies.
Thanks a lot, Caroline. I think that speaks to kind of that actually matches quite squarely with the range of concepts that we've been digging deeper into. I think we've heard a little bit from Albert and Hemendra already on this, but I'm curious, is there a concept of the 5 that we've spoken to that you see holds particular promise? And in your opinion, is there a use case or location that you could see that being most impactful?
Is that a question to me, Justin?
To Caroline.
Caroline, sorry.
Okay, good. So yes, we have seen several use cases. One is being much more efficient around data collection, and Katerina elaborated on that. But we also have seen quite a few use cases where, for instance, an input supplier has joined forces with buyers of tomatoes, potatoes, to make sure that the farmers actually get access to high quality seeds and also the fertilizers that are needed, which has resulted in really very high productivity yields. And all that data and information has also been used to provide the farmers with access to finance. So with the data being in place and the inputs being in place and the market secured, all this data turned out to be also really useful for the bank. This project took so there's a very clear use case there, right? It's around making sure for one reducing costs, but also for the sourcing companies to improve the quality and the quantity of supply that they are getting from the farmers. And then for the financial institutions, it is also a way to be able to service smallholder farmers with financial services, because they have access to the farmers, they have access to the data that is required to assess the creditworthiness of the farmers, to also prevent indebting farmers without benefiting from it.
Thanks, Caroline. I think that's a really helpful reflection on particularly that first concept around incentivizing data sharing for digital agriculture and the impact of that. I think a great example of how actually a really focused use case around enhancing access to inputs upstream. Potato concepts can create much broader benefit for different stakeholders. I'd like to go to Albert now, this time, actually, Albert, coming to you. Yeah, I would love to hear, you shared a little bit about a particular focus on the first and the fifth context. I'd love to hear from you, what are Rabobank's strategic priorities in the digital agriculture space? And how does this effort and this concept create value for someone like you?
Now, so apart from the commercial operations that we have in global agri chains, there's also a long-term strategic interest, and that is that given the growing world population, about 60% of the increase in food production will come from farmers that are currently smallholder farmer. So for a long-term vision, we exist for 125 years as a bank, so we do have that long-term vision. We see smallholders as important to improve food security, but also from a commercial perspective, of course. And digitization is just going to be part of that. So that's the link with digital agriculture. And then we more short term or medium term, we have a lot of use cases already. So the whole GDPR discussion about deforestation, European Union legislation, well, it's all about data, and it's even about data sharing, because it's about sharing location data of the farmers that produced your coffee, of your cocoa. So in terms of trade finance, there's many use cases, but also many opportunities to reuse location data, for instance. We use location data for our acorn carbon sequestration. And once you collect that polygon, you can, of course, with consent of the farmer, but you can reuse it. And that's what we are already doing, if needed, with for instance, compliance things. At the same time, there's a lot of there are many more use cases. We see closed data sharing ecosystems like the pure AgTechs or even cooperatives that reuse a lot of their data. So it all exists. But for us, also the real priority is to make it work for cooperatives and farmers that are less well organized. So our strategic priority there is to make it work for that, call it missing middle, not for the well-organized cooperatives, but for that missing middle. And for that, we provide enabling tools. And those enabling tools can be through investees of Rabobank. Avanti Finance is a nice example of that in India, because they bring banking apps to farmers' cooperatives. And then you have a hybrid solution. And that's also implicit data sharing. Also working with AgTechs like AgroStar in India. That's also an interesting example. So we're all in that. But our ideal use case is, of course, where farmers have access to their own data and can reuse that as a negotiating tool, just the way cooperatives started 150 years ago, as a negotiation tool to unlock more services for themselves. And that's the real interesting challenge, but also an interesting business case, because then it's the service providers who can benefit from that. So that's also our medium-term strategic priority.
Thanks a lot for that reflection, Albert. I mean, I think it's really interesting to hear how this, how different, not just the different tools, but the different trade regulatory pressures and use cases, the opportunities for use data, how that actually is reinforcing the value proposition that you provide for your members, and around the strengthening of an integrated kind of cooperative and organized farming model. I think that's really interesting and relevant. And I think just stepping more to the finance side, I'd love to hear from you, Hemendra. You spoke to particularly your interest in the finance-focused concepts around the establishing an AgTech investor syndicate, around the fund of funds, and the blended finance tailoring initiatives in particular. How do you see these concepts addressing the gaps that you encounter in your day-to-day work in a different corner of the funding ecosystem as an AgTech investor?
Thanks, Justin. Clearly, a very important concepts in my opinion. Just to give you data points, especially from India, since this is the geography I operate from. the AgTech investments, if you look at for last 15 odd years, since the beginning of AgTech in India is about $3 billion. If you compare it with the size of ag and food economy, it's almost $800 billion. So to me, it's still a drop in the ocean. And India has attracted over $150 billion worth of venture capital in the last 10 years. And so AgTech is probably less than 2%. So that's where I think we need to figure out why is that? Why fintech, why e-commerce are far, far ahead of AgTech? And the one fundamental reason is that investors see more risk than rewards, right? It could be regulatory risk, it could be market risk, it could be scaling risk, etc. So I think that's where I think it becomes extremely important to build a fund of fund kind of an approach where we sort of support funds which are ready to take that risk, especially I would say pre-Series A and Series A investors and the seed funders when the risk is maximum. Of course, post-Series B, I think most funds are not bothered about sector as much. They're more bothered about the scale and the profitability. But for early stage investing, we need to support many more funds to sort of actually give them enough fuel and ammunition to support the startup. And thankfully, the deal flow looks pretty promising. Every now and then, we see some very good startups. India has over 3,000 AgTech startups already. 1,500 have crossed POC, and about 400 have attracted some capital. But still, there's a large gap which need to be filled by a fund-of-fund kind of approach. Hopefully, incentivizing funds to raise more money, incentivizing some sector agnostic fund to look at AgTech, etc. And then the next question is why syndicate of funds? So again, I'll tell you, like for a startup, it's very difficult to master different verticals of AgTech. Even within digital AgTech, we are seeing so many sort of opportunities emerging. Likewise, even for an AgTech investor, it's very difficult to learn from the deals so they're seeing or from their own portfolio. And that's where I believe in the power of sharing knowledge amongst funds, because everyone is, I would say, in a learning phase, though we see some AgTech dedicated funds already in India and other markets. But I won't say that they have really figured out the magic sauce. So I think that's where we need to build more collaborations. I think a lot of Indian funds can learn from what's happening in Africa, Southeast Asia, and vice versa. So I think from a knowledge sharing perspective, and also that a lot of these AgTech companies are becoming global in nature, as at least they have the aspiration to become global, and that's where opportunity to work with funds across geographies can really catapult globalization of the AgTech models, which otherwise would take longer time. So I'll pause here and back to you, Justin. Thank you.
Thanks a lot, Melinda. I mean, I think it's great to call out kind of the value of knowledge sharing, and I guess a bit of humility in terms of the opportunity to learn from different corners of this AgTech ecosystem, understanding there's different as kind of contributors to success, and also across regions. I just want to pause at this point. We have about 10 minutes left. And want to encourage folks that are joining through the website or via the Zoom, please do feel free to send questions through the Q&A, and we'll try to save a couple of minutes for one or two at the very end. So we are looking out for those. Feel free to send those through. I want to go back to step away from the finance side and going back to this first concept around data sharing and around data sharing and incentivizing actually more open systems, and reflecting, I think, what Melinda, you were talking about around recognizing the value of shared knowledge. And Albert, I'd love to come back to you on this. Can you share some of the key lessons that you've learned in terms of developing platforms and programs that are centered around data sharing in digital agriculture?
Yeah, sure, Justin. Happy to do so. So data sharing as a concept is not new. It happens outside agriculture and especially outside emerging markets. It happens in airlines on engine performance data, but it also happens in Dutch agriculture, for instance. And one particular lesson we learned with an initiative is called Joint Data. That's all about exchanging data around dairy farmers, feeds, offtake, milk quality, milk robots, etc. There's a lot of data there from transaction records, from IoT, etc. What we learned there is the importance of trust, and that immediately reflects in the organization structure, because joint data is set up as a cooperative eventually. So it's not just about the rules; it's also about the influence to make the rules. So everybody who joins, including Rabobank as a lender, they should have, let's say, influence on the governance of such a platform, not just on definition. So that's why associations and even pure cooperatives are often found in data sharing initiatives. As soon as one party captures it, all the trust is gone. It will never work. And I think that's a global insight that is very relevant. Although we need a lot of local adaptations, there are global insights that are key. I think another big issue, especially on emerging markets and smallholders, is consent. We have other applications in Rabobank where we allow the clients to give consent through their smartphone, and it's just a row of data or a column of data and a column of applications, and you can manage that yourself. And then consent, which is a big point of attention in data sharing, is relatively easy to organize. At the same time, if smallholders don't have smartphones, then it's way more complicated because there's always a delegated authority through farmer organizations, through others. So that's a puzzle or a nut we still need to crack. But of course, the arrival of smartphones will solve that to a large extent. But of course, that's not the whole story, because there's also literacy and other important topics. So I would say those are two key lessons: trust and consent. Finding the right use cases to show data sharing, to show that it's a viable, let's say, activity. Especially in emerging markets, that's also not easy. So I'm very happy with all the initiatives that go on in India in terms of infrastructure, with AgriStack and related activities, because that could really be a key driver for kickstarting that. Thanks, Justin. I leave it like this.
Yeah, thanks, Albert. I think that's great insight in terms of like the intersecting challenges of managing not just the rules at the table, but influence over those rules and how that flows to consent and trust in the infrastructure and that experience. And Caroline, maybe this is a good place to bring you in. Given your experience with the IDH FarmFit intelligence platform, where you've been, I know, navigating a lot of these waters in terms of incentivizing data sharing amongst public and private sector actors in the digital agriculture space. Do you want to could I ask you to reflect on some of the challenges and keys to success in this space, and particularly if you have anything to add onto those listed by Albert?
Yeah, thanks, Justin. And indeed, what Albert says resonates a lot, because what we really see is that until this data sharing, data infrastructure, until you are solving that, it will be quite difficult it really hinders to find that business case. So we now see a lot of money being invested in this early stage, and then the adoption is too low to take it to the next stage. So one way of solving that is to collaborate much more. But it is not easy, and trust is tremendously important. So who is driving this? And it shouldn't be driven by a commercial entity or by one organization. It's really important that it's a joint effort. And it also requires a quite strong alignment on some of the key principles of how you operate indeed. It also requires some willingness to open source your own data and methodology and things. So this is something that we have started doing. We will be sharing even more very soon. So follow us on LinkedIn to stay informed. But we will be able to share some information around so a platform or a portal where you can play with some of the data yourself, like to which services do farmers have access, and what services that they are needing. So this already provides some customer intelligence to enable the digital agricultural providers to know their market. We will also, and what we have seen, that once you have some data yourself that you can share, the whole discussion around with others to start that collaboration also becomes much easier. An important, I think, and then two things, kind of these preconditions to get it going is you need to think really around the anonymization. That's really important. You have to also get the consent for data that you want to share, and really think around this alignment, this common indicators, and I think we've gone a long way on that road, and looking forward to be taking it to the next level.
Thanks, Caroline. And wow, nothing like hanging on a cliffhanger. Really looking forward to the report you're going to be sharing out and how you've been navigating this. And I see that Charlotte has shared a little bit more detail in the chat here, which if you can't see it, we'll make sure to share out afterwards. So unfortunately, I think we need to close this session due to some availability and making sure we have time, that there's time for the next to start. So I want to thank Caroline, Alberts, and Hemendra for taking the time to share their reflections, insights, and their own call to actions on this point. And hopefully this is continuing to be the start of a conversation and discussion rather than the close. Please, if this has gotten you thinking, in particular, if you have a project, challenge, or use case related to one of these 5 themes, we are looking to engage and to help to sharpen these concepts into something that is further backable and aligned into the portfolios of folks who are really driving change in the space. So please do reach out to us to learn more and explore opportunities for partnership. You can reach out to me at my email listed there, or Justin at beanstalkagtech.com, or to Caroline at idhtrade.org, or to any of the other panelists that have been on this call. So thank you so much, and we wish you a great ICT4Ag virtual day.